So this is the recorded version. We've talked about the feature classes. So Apollo bot is quite dynamic. It's automated. The dynamic nature of Apollo bots is quite impressive. Okay, so we've talked about the futures, which is fully automated, and this robot has been tested. It has gone through all the turbulences in 2023 because 2023 was actually the year of the bears, because the year of the bears started from 2022, I think the second or third quarter of 2022. So markets started to nosedive until 2023, where we had turbulent markets. And the good thing is that the Apollo bot was launched after backtesting it in 2022. So it was fully launched in 2023, where we had some very, very ugly events. We had over 4 ugly events, and it's been able to withstand all the turbulence in the market with all the pumps and dumps and all that. It never had any issue on that. So that's why I recommend it, okay? The profits are consistent. Profits are very consistent. So now, before going to the sports classic, now, I need to record this down, okay? For record purposes, it's recorded actually. Now, if you have capital, some good capital, say $300. How do you trade with the $300? Now you're preparing for the bull run. How do you trade with the $300, with $500, $1,000? How do you trade with such capital? Now, these are my recommendations. Personally, you can split your funds, because the Apollo bot has provided such parameters, different bots with the help of this Microsoft QLib that tracks the markets in real time. So you can split your money into 3 places, into 4 places, and place them in different parts of this bot. How do you do that? You take your capital and split it, and you do what we call the 60-40. What do I mean by a 60-40? 60% to 40%. Or you could do a 50-50. So if you have $300, all you need to do is you put $150 on futures and $150 on spots. Okay, you have, say you have $1,000, you could do 40% on futures, 60% in spots. What do I mean by 40%? So now you put out of your $1,000 capital, you have $400 trading in futures, then you have $600 in spots, because we're preparing for the good one. So we want to accumulate some coins. As we know in futures, the futures market doesn't accumulate coins. The futures market is like a predictable market where you predict and you earn money as the market goes up or down. So, but in the spots, according to the name, you could accumulate some coins and trade it for higher profits. So that's why I recommend 40% on futures, 60% in sports. So in sports, the 60%, you can as well split it further down. So now you have $600 left. Now you have, of course, you have $400 trading in futures. Now, mind you, I'm talking of a $1,000 capital, where you have $400 in futures, you have $600 on sports. So on sports, you can still divide the money into 2 places. So it becomes 50-50. So now $300 goes in what you call the AI DCA. So you tap on Sports Classic. Here, I introduce you to Sports Classic. Now you come to Sports Classic. Now let's see what is, let's see. You can see the strategy type. You have the AI DCA, you have the DCA, you have the AI grid, you have the grid. So when you come to sports, depending on your capital, you can split your capital amongst the trades, the strategy types here. So I will tell you for the leftover, for the 60%, using that $1,000 example, so you now have $600. So I will do this. I will put $300 on AIDCA, and the next $300 we're going to be using. You're going to use to trade the DCA robot. So these are all artificial intelligence controlled markets, controlled bots. Okay. Now the AIDCA ensures that you are in the market 24/7, trading stable coins. Okay. Okay, you see some coins, you want to trade them, not just trade them, you also want to accumulate them. When these coins are dropping, you are also accumulating them bit by bit. Okay, so the AIDCA, the advantage of the AIDCA is that as the coin drops in percentage, say it drops 5%, if BTC drops 5%, the AI will buy. It will buy at a lower price for you. Then if it drops again by 5%, it buys more. Okay, if it keeps dropping again, it drops another 5%. What happens? It keeps buying. So this is what you call the DCA. So it buys at every level, accumulating those coins. Okay, so you can also call it averaging. That's the dollar cost averaging. So as the price of Bitcoin becomes cheaper, now Bitcoin goes from 44,000 to say 41,000. It means you have accumulated Bitcoin at a cheaper price, such that when the market starts to reverse, what happens? The robot's going to sell at a good price, probably at an average price. So it keeps averaging. As the coins go down, it keeps averaging. So all the time in the market, you are always at advantage. There is no loss. Okay, you are always at advantage because you are buying Bitcoin cheaper. So that's how you accumulate BTC, okay, or Ethereum, or whatever coin of your choice. So that's what the AIDCA does. But now, from the name AI, it has control over its own parameters. You can't control much here. So you can't instruct, here you can't instruct the AI on what percentage or on what profit percentage you want. So the AI tracks and sells at a reasonable rate, okay? At its own reasonable rate according to the real-time tracking, okay? So that's what the AIDCA does. So now, so I said, put part of your money in the AIDCA, choose some good coins, and you trade there. The next is the DCA, okay? I hope we're grabbing. If you're grabbing it, you put some thumbs up there. Now the next is DCA. What's the DCA? From the name DCA, of course, is the dollar cost average, okay? For those of us who have some time, probably you don't have any day job, you want to make trading your first and second job, this is a good place to be. If you're a busy guy, stay on the AIDCA, put in the coins, and go ahead with your job. You don't need to trade any signal. You don't need to monitor the market. You need nothing. Put in your coins on AIDCA, and the robot will track and trade the coins for you. Now, you say cryptocurrency is your major forte, is your major job, it's your first and last job. Come to DCA, okay? You get to DCA. What does DCA do? It's the same thing, the DCA, dollar cost average, except that you have control over the margin. You have control over the systems here, okay? You have control. You can see. Can you see the difference? You see the TP. You see the profit taking. You can change this profit taking from 1.5 to 2%. I hope my screen is visible, please. If it's not, you can say it now. So this is the difference between the AIDCA and the DCA. So now I can always control what I want from the market. Okay, now look at AIDCA again. Let me go back again. Check out the AIDCA. Can you see that the profit taking? What do you see here? You see smart allocation. Smart allocation means the AI is in charge, so you don't need to worry your head. Okay, but in DCA, you can see you can control what you want. Okay, so I could come here and say, oh, I want 3% from this market. I want 3%. My margin ratio, if I feel 5% is too much for margin ratio, I explained what margin ratio is. Margin ratio is the difference between your probably the current price. When the current price changes in price, probably drops down. Because in this case, the case of spot, when it drops down by certain percentages, that's the margin will change. Okay, so the margin ratio will change. So you can set up your margin ratio to instruct the robot at what percentage you want the robot to buy. Do you want the robot to buy at 10% market drop? Especially if you're trading a very volatile coin, you might want to set high margin ratios. Those are those coins that drop by 10% in less than 24 hours. So you could want to trade 10% margin ratio. Okay, what's the advantage of this? The advantage is that it gives you the opportunity to buy at low price, at low market price. Okay, so imagine Bitcoin drops 10%. Okay, if you calculate when Bitcoin drops 10% and you instruct your robot, you make on Bitcoin, your margin ratio should be 10%. That's it means you're buying from the bottom. All right. So please, this DCA method might not be for everybody because you might think we're speaking so much. I don't mean to make it technical, but this is for those who want to make it. You want to make trading your day-to-day activity. So you might want to have all these parameters set up for you. So when a signal comes into the group, you can pick those signals and trade them on DCA. All right. Okay. So you can see I could do this, and after setting up, when I'm done with setting up, then I come here and I tap on launch. So I just launch it, the robot starts to trade. So I could choose to leave it on cycle. You can see cycle here. I could choose to leave it on cycle. I could choose to leave it on cycle. I could choose to keep it on single. I have cycle. You can see cycle here. Here, see cycle. Let me see if I can mark it out. You can see here. I could choose to have it on cycle, and I could choose. Let me remove this. So you could choose to have it on cycle. You could choose to have it on single. Okay. You could choose partial take profits. I could choose full take profits. Okay. I could also choose to leave it on martingale. I could choose to take on flat. So let me quickly run down the difference between this. I have told us the difference. Actually, the martingale means, of course, it multiplies your initial position. Okay, so the first order becomes 20, and when the robot is about to buy the second order, the second order will become 40. Then if it's about buying the third order, you can see here you have maximum order of 7. So as it keeps buying each of these orders, the martingale will keep multiplying. And since our minimum here is $20, minimum here is 20. So from 20, the martingale strategy will make it 40 on the next order. Then after the next order, you will see it's 80. So you can see the martingale strategy will demand more of your capital. So it's very advantageous for those who have good capital. So with martingale strategy, you're trading quite, if your capital is good, this is where you make serious money. But if you don't have good capital, please stick with the flat. You can see flat here. You tap on flat. So the trade stays on 20. So it will keep trading 20 for every order the robot takes. It will just take only $20. So if you go on 5 order, for example, you say this order is 5. So it's just 20 times 5. It means that that particular coin, the robot is going to just buy that. Should it exhaust these 5 orders, it means you're just going $100. You've just gone into that trade with $100. Okay, so it's going to be 5 times 20. It makes it $100. But with the martingale, you'll be doing over $300. Okay, so that's on flat. So on full TP, if you put it on full TP, you're only instructing this robot to take the 2%, if the percentage you have here. If this is 3%, now the full TP means instructing the robot for every market. You're instructing the robot to only take full TP. Now, full TP means that the robot will be averaging. As it buys low, it will keep averaging. It will not sell. It won't even sell any of your order. Okay. Now let me make a description on full TP. This is what full TP works. This is how it works. Now, this is your chart. These are your grid lines. Okay. So now, if you buy BTC here, okay, this is Bitcoin, BTC. When you buy here, and you use full TP. As the market goes down, when the market goes down and comes up, it won't take any profits because you have instructed this robot to take probably 3% of that trade. 3%, okay? Now, it will keep doing this. Now, but what happens is it will be averaging. That's using the DCA system to average. Averaging means as it buys low, the system, the robot will adjust automatically. It will automatically adjust your average price, okay? It will adjust your price, and adjustment of your price is something only the robots can do. It's because that's the DCA. So as it buys, it adjusts the price. So when it keeps going down and doing this, it will keep adjusting, but it will not take profits. The only time it takes profits is when it keeps, and when it comes up again, somewhere around here, this is where it will hit that full TP, okay? Can you see? It hits full TP somewhere here. But remember, you bought BTC somewhere here, okay? But it hits full TP somewhere here. Why? Because it was averaging all the way. So it happens in sports, it also happens in futures. So you may be wondering why am I not seeing profits? I'm not getting any profits. I'm not seeing any profit. It keeps averaging and all that. It keeps averaging. So it keeps averaging, and it keeps averaging. It keeps averaging until it hits TP. Now, let's now go to partial TP. What does partial TP do? This is what partial TP does. The same market, the same market, it goes this way. You buy from here. As it goes down this way and comes up, what happens? It takes partial profits. It takes partial profits. Okay, it picks partial profits. It comes down again. It buys in another order. It buys in. It comes up this way. It takes another partial profits. Okay, it keeps doing this, taking partial profits until eventually it will come up and take full profit. Okay, so it will do this either on a cycle or on single, depending on the cycle or depending on the running mode. Okay, so this is different between partial and full. So trading the DCA, you have the option of picking between full TP and partial TP. So full TP is good for those who want to accumulate. You want to accumulate more coins before selling. You don't just want to sell. You want to gather them. You want to accumulate so much more. So you use full TP. But you want to sell, okay, you want to sell as the trade is going on. You want to keep picking profits along the way because you want to keep buying and selling. Use partial TP, which is very good. And this partial TP is what I use personally, okay? So that's on that. The next is, okay, what's the next? Okay, now, cycle and single. Okay, from the name cycle, cycle means you trade and you want that trade to keep on moving on a cycle, all right? You buy BTC, you want to keep trading BTC no matter what, you want to keep trading BTC all night long. You're trading BTC this way on cycle. So what happens? BTC keeps going, you keep buying, okay? You buy here, okay? You sell here, you buy here, you sell here, okay? This is what you call the cycle. So it keeps doing this until you are tired, all right? So this is the cycle, okay? But the for single, you just want to buy a particular coin and sell at a particular price. Okay, you want to buy a particular coin, say you buy, this is your buy, sorry. Okay, you come here, so a coin comes this way, and you buy. You buy here, then the coin goes up here, you sell here. So that's it. You end that trade. The trade is closed. Then you pick another coin. Okay, so this is how you choose between the cycle and the single. Okay, so that's on the DCA and the AI DCA. Now, the AI grid, I talked about it before, but for record purposes, the AI grid is very good for stable coins. Okay, so in the AI grid, you don't accumulate so much coin. So the AI grid is a buy sell thing. So more like the DCA and the AI DCA, the difference is that the AI grid is just a standalone system, but the DCA can also perform what the AI grid is also doing. All right, the DCA can act as AI grid. So, but then you have varieties here. So you have a very large capital. You have $10,000. You have $5,000. You could come to AI grid and say, okay, in AI grid, you want to trade Bitcoin, Ethereum, and what other coin? Maybe Dogecoin and XRP, right? You put them on cycle. It will trade from now to the next 20 years. So now you choose the AI grid and say, you want to buy Bitcoin. So that's what AI grid. AI grid is good for stable coins. These are coins that are not volatile. They are quite stable. They don't do, in 24 hours, they might not do more than 3%. Do you understand? In 24 hours, they might not do more than 3%. Yeah, max they will do is probably 1.5 or maybe 4% in 24 hours. Then probably in 7 days, they could do maybe 5%, 10%, okay, in 7 days. Okay, let's see example of this coins. A quick example is this. You come to your market, okay, look at Bitcoin. Look at Bitcoin. In 1 hour, you can see Bitcoin. Then in 24 hours, what are you seeing? You're seeing 3.7% in 24 hours. That's Bitcoin. Then in 7 days, it did 16.4. That's because Bitcoin at this point in time is having a serious pump, a serious rally. Then you see Ethereum. Ethereum is 11 in 7 days, and you can see it is 1.6 in 24 hours. So these are stable coins you can put on AI grid. So you can put them on AI grid. So many other coins like that. So that I just wanted to show you a quick difference between that. So you could come on AI grid with your capital. You put them probably between depending on your capital. You could put 10%, 5% of the coin or the particular fund you want to allocate here. You say maybe you put $30. So now the grid counts. If I'm trading Bitcoin, I could make my grid count maybe 15. I could make it 20 because I want to buy Bitcoin deep down. Okay, so I use the AI grid. So I just do this and that's all. I leave it on cycle. This AI grid, I leave it on cycle, and next thing I just tap on launch. Then the robot starts to trade. So what's the advantage? It will trade for every grid. Okay, for every grid, it will buy Bitcoin and sell Bitcoin. So for every grid, you have your grid lines. You have your grid lines. So the robot, like I said, is not predefined. So it adjusts. It's automated to adjust its grid line. So if you have 40K, okay, you have, let's say 45. Okay, 45 at the top, then you have what at the bottom? You have 30. So this is a perfect example of the grid. So you have different levels here. You have maybe 40, you have maybe 35, like that. So what happens? Now the AI grid we specially automated to select between this. You start your trade here. So it buys in as it goes down. Okay, hold on. I like to change my colors. So as it goes down, this is another grid. So there are other grids in between because it's automated. Now what happens? The robot's going to buy at this grid line. So once it enters, once it buys, this is the first buy here. This is the first buy. Now it also registers a take profit somewhere there. Now this is the second grid. It registers an entry and also a take profit. So when it goes down, it does this. So each time it comes back to this grid, it takes profits. Okay. If it goes down, it buys. Also, it buys another grid. So it keeps selling. So that way, the grid system doesn't just tie down your money. it will buy at different grids and sell at those grids. So it sets, for every grid, it sets up what we call its own take profit. It keeps adjusting. So there is a take profit for every grid. So this grid has its own TP, every grid has its own TP. So take profit here. So the AI grid system does not accumulate coins, all right? If you're not interested in accumulating Bitcoin, just go for the AI grid, put your capital and start trading. So put some stable coins here like Bitcoin, Ethereum, Doge, DOT, that's the polka dot. You can have which other coin? So many of them, XRP, Matic, Solana, just put them here. So every grid has its own TP, right? So every grid has its own TP. So as it goes down, so you can see it continues this way in a cycle. So it keeps going up, down, up, down. So that's the AI grid. So it's automated. So now, just like the AI DCA, the DCA, now you have the AI grid, and you also have what you call the grid system. So the grid system, just like the AI grid, is fully controlled by the bot. Now the grid system is semi-automated. Okay, so these two systems, the DCA and the grid, are both semi-automated, while the AI grid and the AI DCA are fully automated. So in this grid system, it allows you to set up the different profits you want to take. Okay, so you put up your $30 here, you have whatever you want. How many grid counts do you want? You want 20, you put up your 20 here, you come to the running mode, you say you want cycle. So grid systems are good to put on a cycle. Okay, personally, you want to trade grid system, you could put them on a cycle. When you're tired of the cycle, you can now switch them back to single so that that particular asset will be sold out. Okay, so now profit taking, you could pick your own profit taking. Unlike the AI grid, you can, the robot sets its own profit. Okay, it's very smart. So it could pick 1.5, it could pick 2%, it could even pick 0.9. Right? So you can also check them out. So this is how it works. So you can set up your own margin ratio, just like I explained. So that's for the AI grid. Time might not permit me to go into other strategies of trading with this robot, but believe me, it's the best bot I have seen. And trust me, other upgrades are coming that will make the Apollo bot quite interesting for us to use in the coming 2024, because the bull systems are coming, right? The bull markets are coming, okay? So now, let me give you one last trick, right? For the DCA. Now, you want to make more money for DCA, okay? This is for traders. You want to trade. If you're not into trading, you just want to stick to your automated system, there's no worry, you still make your profit, no problems. Now, with your little capital, the advantage of DCA is because you could just come in here. Probably you don't have funds. You can hop into the DCA, the sports market, with your $50. So now you come here and say, oh, there is a signal. A signal comes into the group. For example, WorldCoin comes in, or maybe AveCoin, AAVE comes in, or Shiba, whatever comes in. What do? Calculate the allocated, your allocated fund for this. Probably you say it's $100. You have allocated $100 for this particular coin. So how do you trade it using the DCA system? So you could come here. First thing you need to do, this is my own approach. You could come here and say, you put in 30% of that capital. Okay? 30% of 100 means what? $30. All right? So follow the signal, follow whatever signal you have. For example, you have the ones we sent earlier today. You have, say, WLD, that's the WorldCoin. So you come here, you put in 30, okay? Then the maximum order says probably 5 or 4. You put in 4 right here like this. Then you come to margin method, you say it's flat, partial TP, single, okay? Then what's the take profit? Take profit says probably 3%. Okay, look at it. And what else? Every other thing is okay. Now, look at this setup. I have used 30% of my capital. Okay, I'm setting this example with $100. Now I put in 30% of my capital. Then next thing, I launch. When I launch this, what happens? The robot will enter the market with $30 out of my $100 capital. So you see it written on the screen, you will see it 29.9 because of the charges. So it goes into the market initially with my 30. So once I see it has gone over my 30, what do? I come back here, I come back to that coin. Then I just go back to that coin and I will go and edit that same coin, right? I will edit that coin, then I will make it, I will then use what we call probably 20% or 10%. So I will come down a little and say, I come down to 20. Because you can't do less than 20, okay? For those trading $100. So now come down to 20. So what does this mean? It means the robot has gone into the market with $30. That's 30% of my capital. Now I'm instructing it, after going in with $30, the next order will now be $20. That's how you make profit. So it means, you see, my first entry was higher than my other entries. So I come here and I set up the next one as 20, then every other thing remains the same. So the next order the robot is going to be picking, if this market should drop by my margin ratio, if it's 5% or 3%, whatever, this market should drop by 3%, what would the robot do? The robot will simply buy $20. Simple. And when there is a right price, the robot will take 3% of that money. So eventually, at the end of the day, I might go into this trade with a total of maybe 50% of my capital, or maybe 70% of my capital. So when I'm coming out, it's coming out with good profits. That's one of those tricks. So that's what we're going to learn for today. And next time we'll look at other ways to tap into the market as a day trader. That's making day trading your thing. Okay, so we're going to be looking at that next time on this call. So probably I'll be taking questions. If you have questions, we'll take questions.
Good evening, Mr. Ike.
Okay, good